My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. I took the Dow 40,000 hat in my hands. I had it right there. I noticed the bill, the writing. Couldn't have been a finer baseball cap. And then I put it down, and not on my head, but right on the desk of my day job on the set of Squawk on the Street. I wouldn't put it on. Was I concerned about a jinx? If it was, we didn't avoid when the Dow dipped 197 points today. Even as the S&P edged up 0.09%, and the Nasdaq gained 0.65%. Nice gain there, led by the semis. But I don't think not wearing the hat was about a jinx. It's something else that's a lot more pernicious, frankly. You see, way back in the 80s and 90s, we celebrated each millennial milestone on the way up. Oh, they were hard fought. Sometimes we seemed trapped, like when the Dow was stuck in the 2000s from July of 87 until January of 1992. A crash like we had in October of 87 can do that sort of thing. There are other times we just breeze through the milestones. Lots of hats on those with beautiful days up. Then came the turn of the millennium, and while the Dow somewhat held in there, the 77% collapse of the Nasdaq was too much for people to handle. A whole generation of investors vanished. Many never came back. Those that did came back, they got crushed by the Great Recession, when those round numbers reversed and reversed hard, cut by more than half at the bottom. That's when I gave up on the hats. What good was a hat for Dow 14,000 when the Dow's at 7,000? Yeah, it did get that gloomy before March of 2009. Now, though, I'm beginning to rethink my negativity about the hat. What is so bad about celebrating the immense wealth creation? Granted, I know that the Dow isn't as representative as the S&P 500. No kidding. But it still resonates. Why embrace the hat? Let me give some ideas. First, it has been almost 20 years since the Great Recession. That decline was bruising because we had what was known as systemic risk, meaning the entire economic system was in jeopardy. As I survey the landscape here, I just don't see anything like that happening. Now, you could argue that we didn't see it the other time either, but au contraire, a lot of people saw the financial crisis coming. I was screaming about the danger. They know nothing! Back in the summer of 2007, for heaven's sake. That was so long ago that two new generations, the millennials and Gen Z, may have forgotten it. Some of these guys, Gen X, maybe it's ancient history. However, these are people who, for the most part, still have a very negative view of the stock market and their financial future. I think they want to make money in it, but they don't know how. Maybe they need to be lured back in by being a little more positive. That's really the issue. We, my generation, the baby boomers, have closed the door. We're often pictured as the last generation that genuinely believe that we have it better than our parents. I wonder if by not even showing interest in Dow 40,000, am I doing my job? Maybe I should demonstrate some confidence. Maybe this market deserves a little positivity. Second, okay, there are 30 stocks in the Dow. It's not all that diversified. The winners for the last 10,000 points, though, were diversified. American Express, Caterpillar, Goldman Sachs, Merck were four of the top five stocks. JP Morgan, where CEO Jamie Dimon told people that succession is well underway, finished eighth. He says the timetable for retirement is not 5 years anymore. That plus a decision to limit buybacks at high prices caused that stock to tumble $9 or 4.5% today. What matters to me, though, is that Dow 40,000 was a team effort, not just tech. The biggest worry surrounding this market is that it's been led by a handful of tech stocks. But this workhorse venerable index is truly diversified enough to show you that many areas of the economy are still doing very well. These stocks should have been hurt by the Fed's 11 straight rate hikes. They should have been crushed by the inflationary spiral. They should have been annihilated by supply chain problems during COVID. None of that happened. Again, maybe give me the Dow 40,000 hat. Third's the biggest issue. What the heck is the matter with celebrating when stocks go up? Don't we want to make money? Don't I want you to make money? We have so much negativity that surrounds us. We're drowning in it. All of a sudden, something positive falls into our laps. A major milestone is passed. Does it really make sense to scoff at it? 42 years ago, with the Dow hovering at 1,080, I came down here, right down the block, started my lifelong obsession advising people to own stocks. I was surrounded by people who told me that I was out of my mind for wanting to recommend stocks. I had people tell me I was going to crush everyone by telling them that this stock or that stock was worth buying when the market was a giant joke. When I got my chance to do so the next year, what happened? I was inundated with words of caution from people who knew a heck of a lot more about the business than I did. They'd seen recession, stagflation, impeachment, resignation. They didn't buy into Ronald Reagan's entire uplifting rap. Hollywood actor, what did he know? So what happens? Well, first, the Dow drops back to 777 in August of 1982. I applied to work at Goldman Sachs because I really believed I'd be right. I was one of the few people who applied. I got hired as a summer associate in 83 when the Dow was back over 1,000. I felt like I was in Jellystone National Park down here. All kinds of bears. Bears on tech, bears on finance, bears on bonds, bears on the government. Nary a bull in sight. But the stock market? Well, it left those people behind. Except for a couple of times when the Bears were in charge. You got to admit that when you get a run from 1,000 to 40,000, they're a little celebrating, weren't it? Are we supposed to be as underconfident and negative as everyone was at Dow 1,000? Should we not be skeptical, but be nihilists? Should we be nihilists who believe in nothing? Certainly not the idea that stocks deserve to be at these levels, that they should be much lower, that these prices are real, that it's all alchemy. No benefit of the doubt for the bulls? Okay, we don't need to be cheerleaders, but we do need to acknowledge the reality. Acknowledge that the market, however temporarily, got to these levels. That they're not exalted. They're just higher than they used to be. And that's because the companies these stocks represent are doing so well that they can make you a ton of money. If you sell some of these stocks right here, if you want to take profits, you can. You aren't going to knock these leadership stocks down with your selling. The prices are the prices, to be incredibly oxymoronic. Get realistic about it. So maybe bring me one of those hats. I'll wear it proudly for what the Dow has accomplished, not what it will accomplish. We went from 1,000 to 40,000. I can bear witness. Sure, we can go down. We went from 1,777 when I got started. I could have tossed the Dow 1,000 hat and gone and become a lawyer. I didn't. Right call. Here's the bottom line. I'm not asking for noisemakers or champagne here. No trophies. But a baseball cap with Dow 40,000 on it? Hey, lose 2 zeros, and that's where we were supposed to be if I listened to my bearish betters 40-odd years ago. Turns out, my betters... they know nothing! Miller in Colorado. Miller.
Hey, how's it going today, Jim? This is Miller and Alan calling from Denver. Booyah, how you doing?
I am doing well. How about you? What's happening?
Oh, I'm doing well. Hey, first time on the show, I wanted to ask you about Alibaba stock. You know, it's had a cheap valuation for quite some years now. You know, free cash flow is improving. Just wanted to get your thoughts on the stock, you know, and risks that investors should be aware of.
You know, I was talking to my buddy Dave Tepper. He's got a huge position. He was one of my 1,000 bosses that I had at Goldman. And we both admit, I mean, this is just one of the cheapest stocks. It's the cheapest stock in the world, cheapest major stock in the world. If you can stomach owning a stock that is from China, buy it. That's what I have to say, and buy some more if it goes down. Let's go to Tom in California. Tom.
Booyah, Jim. Thanks
Booyah,
for
Tom.
having me on. I appreciate the tutelage over the years.
Thank you.
My question is Tesla, buy, sell, or hold?
Great question. It's what I call a down stock. There's the preponderance of people who come in do want to sell it. I don't want to bet against the stock down here at 174, but I would buy it in scale. That would mean buying, let's say you want 100. You buy 25 here, 25 at 150, 25 at 125, and then 100 at 25, and then 25 at 100. That's the only way I can recommend it because it is a falling knife right now. Ann in Indiana, Ann.
Hey, I'm a Grateful Club member. Thank you for everything.
Thank you. Hope you like the piece this weekend about, NVIDIA.
Yes, but I'm still back on the piece, you know, about cutting your losses or battling a stock was world class. Anyway.
Thank you for that. Thank you.
Yeah. Constellation Energy. You know, you do the piece. Then I hear, you know, it's like your pastiche. Then, you know, there's Dow's, Jim Fitterling. And then there's a Herd on the Street piece, Friday in the Wall Street Journal, yada, yada, yada.
Right.
What about starting a position up here?
I'm for it. We've done enough work with CEG and with Joe Dominguez to recognize that this is the power company that all the hyperscalers want. It's the cleanest power. It's nuclear power. And even though it's run an incredible amount, I think it can be bought. Let's go to Paul in Florida. Paul.
Booyah, Sir Jim. It is Paul from Florida.
There we go.
And we've been listening since 2002. So our question is this. What are your thoughts on Monday.com, symbol MNDY, and have you looked at the options? They're nice.
I know a lot of people feel that it's going to get a takeover bid. I can't acknowledge anything. I don't know anything about a takeover bid. I do know this. Monday is a very good Salesforce.com, mini Salesforce.com. You call it maybe a junior Salesforce.com is the way to put it. And they're very smart people. I would not bet against them. Okay, maybe you have to bring me one of these. I don't know. The Dow 40,000. I'll wear it proudly for what the Dow has accomplished. I don't know what it'll do in the future, but I do believe that we must have faith. It's the right call. On Mad Money tonight, Contour Brands has been out wearing the apparel sector, so I'm finding out what's making the parent company of Lee and Wrangler fly off the shelves. Then should you be all aboard Norwegian Cruise Lines? I've got the CEO to see if the company's latest quarter consented sailing higher. And Palo Alto earnings cross the tape after the bell. And I sit down with the cyber powerhouse CEO to find out more because once again, it looks like, well, let's just say another tough day. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.